Hey, all, Sean Maloney, Digital Business Masters. Another weekly look at all things in digital asset world. Very, very interesting space indeed, and powerful once you get to a certain point. We call it critical mass. Okay, and a lot of that is built off the back of Bitcoin. And finally, bosses, banks, and governments are realizing that they need to do the same. So all we do now is front run it and leverage our existing assets as the world wakes up to the need for sound money. Quite straightforward, very, very simple, but takes a lot of determination and willpower and patience and persistence and fortitude and all the things you'd expect to be successful if you're going to build a business. So we'll look at the big picture, and then the second half of this call will be all about the application of that big picture. Okay, so it'll be a part two. You'll see the link below in the YouTube comments. If you're on YouTube, hit the bell, hit the likes. We've seen the algorithm shift now because what we're talking about on these calls is now not affected as much by the YouTube algorithms because we're talking about the black rocks, we're talking about mass adoption, we're talking about government policy, we're talking about things that the algorithms now deem as appropriate. So you'll saw, huge numbers now build up very, very quickly over at YouTube. So we do welcome your support. Hit the bell, hit the like, and subscribe. That would be very much appreciated. Okay, so we're not here to give any advice at all at DBM. DBM's been around many, many, many years, well over a decade now. And we set up an academy version of the DBM model about 5 years ago. And we do our best to help people go through the process of what it takes fundamentally to accumulate Bitcoin, but find ways to do that in as quick a way as possible, frankly. We'll talk about today. How many hours does it take to accumulate one Bitcoin? Why? Well, because as we reported many times on these calls, this slide now is well over a couple of years old, and it's tracking the price of Bitcoin, and it's tracking the transition from where we came from, which is the entrepreneurial idealists, the people looking to test out the technology. And now, as we enter 2025, we've literally come into the era of institutions, corporate investors, and the main banks. Okay, so we're at this point here, which is why we're at all-time highs. Yeah, and we've got tailwinds. Now, it's those tailwinds that you need to use as the next 10 years transpire, by the end of which 99% of all Bitcoin that will ever exist will have been mined. And right now, the Mike Saylors of this world and the US governments of this world and the big institutions of this world, the BlackRocks of this world, they're buying up more Bitcoin than can be produced in 1 year. So what do you think happens to the price if there's more demand than supply? It is actually as simple as that. There are more nuances, but we'll talk about those further down this call. Now, something that came across our desk the other day was, okay, well, how many hours of work? The question we get a lot, how long does it take to be successful is what people really want to ask. But how long does it take to acquire one Bitcoin? How long does it take? Well, obviously, that isn't a straightforward answer because there's so many variables. So this little slide we picked up sort of demonstrates it in old-fashioned language, I suppose. It's based on the average US wage of $60,000 a year. How many hours of work would you need to put in earning that wage level to own one Bitcoin today? So roughly speaking, 2,000 hours is a year. Yeah, give or take with holidays and all sorts of variables. So you can see how it's shot up, and it's only going to go up faster. So not only have you got less Bitcoin becoming available to the ordinary person, it's taking a lot longer for the ordinary person in the way that person understands how to earn, which for 95% of people is to exchange skill and time for currency. That's what people think is normal. Right? Nothing wrong with it, of course, having a job. But you've got to think about it in the round as to say, right, okay, well, there's only so much I can do as one individual or as a family. Two people working predominantly these days in families, yeah. But what else needs to happen? Because you can't simply, you know, let daylight burn. I mean, we call it burning daylight. Every day's a payday. You have to look outwards and have a look at other ways that you can add skill methods. So earning a wage is fine. Having a job is absolutely fine. But if it's going to take you well over 3,000 hours in order to acquire one Bitcoin today at $100,000 a coin, for example, it's only going to get harder to do that as the exponential adoption of Bitcoin transpires, as I showed you on the previous slide. So what we do at DBM is we look at that and we say, okay, yeah, of course, everybody has to earn a living, no problem with that whatsoever. Plenty of people have a job as well as building out their digital business. But what other things can you consider? Well, on the right-hand side, you can see there's lots and lots of things you can do. But one thing's for sure, each of them will take skill. Each of them will take determination and resilience. And each of them is a lot easier to do when you're working with other people. So you find your tribe, whatever that is, yeah. We've just decided over the years to develop our own little tribe and do our best to support people through these skills methods. And we have certain ones that we focus on, obviously, because we look for low-hanging fruit. It's easy to look back over time and say, well, I wish I'd have just held. I wish I'd have just, compounded and done nothing else. It's easy to say that in hindsight. But in reality, you're constantly searching for ways. And those ways work or they don't work. They work well or they don't work quite as well. They work, but they might take longer than you expected. They work, but they might be harder than you expected. Which is why at DBM we talk about mindset, skills, then systems, then income, then wealth. Because we all want quick and easy, right? It's human nature. Especially if as you get older, you want things to be done faster because there's things you didn't do when you were younger. That's perfectly natural. So you want things quick. Lots of people try and buy success. Yeah. So there's lots of ways at DBM that we manage to balance between what we want and how long it's going to take us to get what we want. And that's the challenge. But the goal never changes. So if you were smart enough, many of the DBM community back here, back in the early 2020s and late of last decade, 2018, 2019, it was going to take you less than 400 hours to accumulate one Bitcoin. Now it's well over 3,000 hours to accumulate one Bitcoin. In a couple of months, maybe even half a year, certainly by this time next year, that'll double. It'll double. It'll be nearly 3 years in order for you to acquire one Bitcoin on an average wage. So think about that, because that's where you need to really be focused. Not only because, in my opinion, you have to have a diversified digital system, blockchain factory. Yeah. But also, if you have started something, this should be even more motivation to see it through. Because the alternative is to go back to the job or put more pressure on the job. And if it's going to be an extra 2,000 hours a year, as Bitcoin outpaces what we can achieve exchanging time for skill, then isn't it a good time to make sure that you finish what you start and focus on what you can affect? So lots of things to think about there, but hopefully what we're going to talk about in the next part of these calls show the real motivation as to why we have an absolute picture of what it is that the asset is worth and what it will be worth. That's no longer challenging. What's challenging now is working effectively every day and strategically every day to get there quickest. Only a few years ago, it was, well, is Bitcoin even going to be a thing? Is it even worth anything? And 99% of people in the world still have that. But those of you at this level, no, no, we understand sound money. And that is now being vindicated by bosses, banks, and governments. So there's no question it's there. Now we need to get there quicker, right? Just own one Bitcoin. So what does that look like in DBM's world? Well, by rightly or wrongly, we've determined over the years that we're not going to just rely on ourselves as one individual, going out there and putting one individual's worth of effort into one place and hoping that one place will give us enough fiat wages in order for us to go out and become an investor as well. Because often your fiat wages are sucked up as quick as you can look at them just by living life. That's the case for most people, certainly earning average wages. So by hook or by crook, over the years, we just determined that, okay, well, we know we need to own one Bitcoin, so let's just dollar cost average Bitcoin. That's no problem. Been doing that for a long, long time. Most people in DBM have. But you want to get there quicker, right? And by definition of the last slide, and by definition of falling purchasing power of fiat currency, everything becomes more expensive. That's sucking up your fiat income. So you don't have enough on the side to be able to even dollar cost average Bitcoin. So then you start to look for other ways to leverage what you have got more quickly. Now that's when risk comes in. That's when trepidation comes in. That's when relationships come in. Supply management comes in. Selecting the right aspects come in. And that's when a lot of fortitude and patience comes in. Because what tends to happen is you'll put yourself involved with a myriad of different ways to create income. There's no shortage of ways to create income. Not at all. But it's the case of having the skill, not just to select and adopt the right relationships and the right leverage points. It's also a case of having the ability to stick with what's going on in order for you to see it through in support of the suppliers that you decided to work with. That is very difficult to do. And you'll find that most people really don't like that because they've been used to a boss or a government or a society giving them what they think they want, making everything as perceivably easy as possible. The minute something goes wrong in an individual's lives, it's everybody else's fault. And certainly this modern age, bosses are under pressure because it can't possibly be the employee's fault. It must be the boss's fault. Governments can't be their fault. It must be the government's fault. It must be society's fault. So everybody tends to kick out. And you contraring that by saying, no, I determined that I'm going to get to a goal of one Bitcoin, and I know I can't get there quick enough with my current wage and fiat only. So I'm going to start allocating to other things. And the minute you're in those spaces and something doesn't go right, then what do you do? So you don't need to select all 14 of these different industry sectors as your business operates. But I'm just letting you know that this is what we choose to do at DBM, right? Rightly or wrongly. And we go through the process. And it isn't easy. But there's no shortage of ways. There's no shortage. There's no excuses. It's a case of making sure we push through. And obviously, we all get drawn to the ones that are perceivably easiest, the ones with the big numbers, the big yields, the big promises, a lot of marketers. Yeah, it's perfectly natural to get drawn into FOMO. But once you're there, it's a case of making sure you work it through, which is very much the story of the last decade of this industry. It's working through it, whether it's been ICOs, whether it's been airdrops, whether it's been altcoins, whether it's been Bitcoin itself. If you went through the winters, 2 winters we've been through at DBM of Bitcoin, you'll know what I mean. So what do we do? So in a nutshell, because we know the goal is absolute, because we understand that the tailwinds are with us, because we understand that there's plenty of ways as an individual now, through the price of an internet connection, can go out there and connect with other value propositions and place funds into something that creates something, because we know all this. So it's no longer like it was a few years ago, which is, oh, is this the right thing to do? I'm not sure. Has this been done before? I don't know. I don't think so. What's Bitcoin? Is it worth anything? Don't know. None of that's relevant anymore. It's like, oh no, this is absolutely what's happening. This is a definite business model that can help engage and drive people into new ways of life. So what do we do? Well, we know we've found loads of ways to do it, but what do we do with all the people that need support in finishing the job? Well, let's set up a structure. And that's all we really are now. We are a structure who have different access points for people to get to the place where they want to be through all the necessary pain and tribulations and success and fun. So you pick where you want to be and move through the gears. All I do know is you're stronger together. Now, just as a quick footnote, if you are a current skills subscriber at DBM, then you've got until the end of this month to get yourself, into the skills, the level up to the systems level for $25. So just so you know, okay, we're sort of, the skills level is okay, but it's not really powerful enough. So most people are moving up to systems and income now, who are moving through these next phases, okay, because that's where most success is. Even if it's not coming as fast as you want, right? You're just working together all the time to keep finding ways to become better and better and better. Mindset, skills, systems, income, wealth. Just think about that and you won't be far wrong. So before we get into the strategy side of stuff, just a quick reminder, it's not about buying liabilities. It's about earning income to put into cash flow to fund liabilities. Big difference. Do what the wealthy do, not what they say. Do what they do. If you don't understand this fully, then speak to your coaches. How do we do this on the ground? Well, I've already said, obviously, dollar cost average your Bitcoin, but you can see how long it takes. Yeah. But best decisions were made, 20 years ago. Second best decisions are made today. So you push on regardless. There are ways to accelerate, but the more you move into these rounds, the higher risks are. Yeah. So don't be any illusions about that. You can't have both. It's time or money. Yeah. So we always do the baseline, which is looking after ourselves, but it's never fast enough. Dollar cost averaging, never fast enough, because you've only got so much disposable income, right? So we do reallocate, and we tend to de-risk that allocation these days. So we take Bitcoin only to a certain point. Don't go crazy if you are going to collateralize. Know your numbers if you're going to collateralize your asset base, your balance sheet. De-risk, use borrowed funds to allocate into higher risk entities, because if anything does go pear-shaped or it's not happening as fast as you want, you've not lost your fundamental asset. Okay, so these are all skills that you need to know. So we work through the process. Obviously, yield is yield. We're constantly looking for things that are yield. I'll show you that in the second part of this call. You'll see the link below in this YouTube channel. And the altcoin markets are when you've got a bit of both. You've got equity and yield, but very, very high risk. It's very difficult to manage, because things are being done on the fly. Things are being literally done by putting the track down in front of the train. And so a lot of altcoins work like that. But if you know that's what you get involved with, then that's what you get involved with. If you got involved with something like that, it's not felt like it's not what you signed up for, or something's changed that you didn't understand, or you've not been able to keep up because it is shifting so much, or you feel like you've got skills gaps, then that's not the project's fault. The whole idea is for you to be supporting that supplier as long as it exists. And if it still exists, then take advantage of equity plus yield. In other words, the coin is going up in price, and that might take a time frame. Don't price watch. Yeah, just look at Bitcoin over the past 10 years. You don't price watch. You just know that there's a dynamic involved, which is often around supply and demand, and you get on with it. Don't price watch. Put yourself in a position where that is also able to create yield through liquidity pool technologies or trading technologies or a multitude of technologies that provide you with a yield. Yeah. Which is not the same as equity. Yield and equity are not the same thing, right? So work with the coaches and they'll put you in the right place. Now, where do we get our confidence from? Why are we continually confident about this space? Well, back in the day, we weren't necessarily confident. Back in the day, you're castigated, you're put on. People are saying you're crazy. Bitcoin can't be worth anything. Yeah. Everybody's got an opinion. And most of the time, that opinion comes from society itself. So your financial advisors, even to this day, your average banker, your average financial advisor, your average pension management admin, your average stockbroker, your average, boss, they only know what they know because they've built their business on what they know, and it's not in their interest. to learn anything else because they're fine where they are until they're not, or they've got vested interest in you not knowing what you need to know, which is why this is the road less traveled. But the vindication of understanding what it takes, if you've been accumulating Bitcoin since 5, 6, 10, 15, 25, 30, 60,000, then of course you've indicated. Bitcoin's vol 60 to 100% a year. What's not to get? But the real vindication has just appeared this last few months, literally, in the macroeconomic level. And it highlights itself in a number of different ways, which gives us the confidence we need to keep moving forwards, no matter what. Now, one of the big ones we drive and look for is this M2 money supply, which is this chart on the right-hand side over here. So all the way, this only goes back to early 2024. But if you understand anything about M2 money supply, if you don't know what M2 money supply is, then work with the coaches and do some research. But all that's happening here is the M2 in yellow, which is the global issuance of about 16 different countries, of their decisions as governments and central banks to print currency into existence, correlates almost exactly with Bitcoin's behavior in price discovery. Now, obviously, it's not as simple as that. If you go back before 2024, 2020, 2017, you don't get an exact correlation like this, but you do get a very broad correlation. It's just this last year or so that's really correlated. The thing that we're interested in is where we are today. Well, this is offset by about 8 to 12 weeks is the offset. So in other words, this yellow line has already happened, and all they've done is pull the yellow line forward to meet where Bitcoin is at any point in time. So in actual fact, this chart's a little bit out of date now. This goes back to the end of April, early May. So we're around here somewhere now. And we've noted that in the price. Right? Bitcoin took a bit of a dip and now it's back up. Now, if you extend this out on the latest charts of M2, you'll see this is now out another 12 weeks. And you'll see the correlation we expect to happen. Now, do we rest our hat on that as if that's all we need to know? And it's not that easy. Of course, it's not that easy. But it's just one of the economic strategic factors that we take into account as we're determining when to double down on acquisition or when to take profit. Yeah, because there's always a need to take profit at some point, even with Bitcoin. But that's not necessarily done by selling the asset. That's another skill. Big areas of bonds, interest rate decisions, the ECB, cut rates already. The Bank of England did theirs last week. And for some reason, the Fed hasn't done it yet. Normally, the Fed front runs on decisions to cut interest rates. But what did the Fed do instead? They printed a lot of money. They put a lot of bond issuance in. They put a lot of liquidity into the market, right? I don't know what the background is to what's going on between the Fed decisions on interest rates, but it's fascinating to watch. All we do know is if they print currency, we win. If they cut interest rates, we win. Right? So the whole thing is just tailwinds. So they're the two big ones to watch. They're the top-end macro ones to watch, the bonds, the interest rates, and the M2. Then you've got the softer signals, such as Arizona and Hampshire last week, signing off their own strategic Bitcoin reserve. Done. Texas soon to come. One state, I can't remember which one it was, but maybe Minnesota, decided not to. Go figure. Right? The Germany of the US. The whole idea is, again, these states are figuring out that as the dollar weakens, which it has to do, if you can't have the cake and eat it, right? If they are going to organize imports and tariffs and rebalance of trade and get oil down and all these things they want to do, then they are going to have to weaken that dollar. The smartest states understand that, which is why they're now starting to put their own eggs together, get their own nests organized, just like we've been doing for decades with our own private reserves of Bitcoin. So we're way well ahead of strategic Bitcoin reserves as individuals, but it's nice to have indicated. Similarly, companies. Saylor, the oracle of this now, he's put himself right up there as being the main guy. Totally understands it. A brilliant educator, great speaker, understands exactly what he's talking about. If you managed to catch the presentations he was doing last week, then well done. If not, you'll catch him on the DBM channels. But the whole idea is that maybe at the moment, what is it? Maybe a dozen public companies, public listed companies have put themselves with Bitcoin reserves. You reckon 700 of them by the end of next year. More demand on Bitcoin. Coinbase sits in the middle of all this. They bought the options giant Deribit, 2.5 billion last week. Yeah, massive deal. Huge companies all being, conglomerated and brought together. The Office of Control of the Currency last week, regulated banks, OCC banks, can now buy and sell assets held in custody and are permitted to outsource bank permissible crypto asset activities, whatever that means. But that's a step forward, again, with the, let's say, regulation and legitimization of digital assets in the wider traditional finance world. That's all that means. Okay, so it includes custody and execution of services. Remember, not everybody's going to want to do what we do. Wouldn't blame them, actually. What they are going to want to do is get exposure to this, but have other people look after it. To be clear, what we always say, and what I always will say at DBM, not your coins, you don't own them, right? You must have an element of custody, self-custody. It's not for everybody. It takes a lot of responsibility, especially as the asset price goes up and up and up and up. But think about cold storage, go into the Systems Plus Hub, have a look at all the videos, the trainings, have a look at all the resources about how to keep safe and look at self-custody. Speak to the coaches. They're doing it themselves. We're all doing it ourselves. Yeah. But for sure, your average person won't necessarily want that level of responsibility. So they're going to put self-custody into institutions and ETFs and banks and OCC. Of course they are. But the very fact that it's happening is the point of this. That normalization is coming into the industry. And even at the level of the SEC. So Hester Pierce, the new lady there, who is looking after a lot of the activities around the SEC's considerations. You're looking at now, they're considering the conditional exemption of allowing trading tokenized securities and blockchain to transfer innovation while maintaining investor protection. So jargon for basically saying that the SEC is now much, much more favorable in terms of what's going on with digital assets, including Bitcoin and many others. And again, that's a tailwind that's just driving people into ownership of mainly Bitcoin, but also other assets as well. Yeah. And then you've got the even more interesting stuff. So as we go into the political side, just another few things to mention on macro, but we'll talk about the political side as well shortly. Something I'm really looking forward to from my heritage and what I've observed over the years with the EU experiment and what I've observed this last few years with the El Salvadorian experiment is even countries like Ireland, yeah, used and abused by the EU. A lot of the Irish will say, oh no, it's been fantastic, the Celtic Tiger, it's been nothing, it's been absolutely great. Well, maybe. But in terms of what that country's built on, it would do very well now to start to look at its own Bitcoin reserves and become the European El Salvador, in my opinion. So you've got McGregor, the cage fighter guy there. He's obviously got a massive presence and blah, blah, blah. Probably hasn't got a politician bone in his body. But who needs politicians when they've failed us for so long? Try something a bit different, right? As long as he's got good advisors around him. So he'll spearhead this. And apparently he's already set to meet Bekele and Max Kaiser on a Spaces of all things. So you never know. We may even be able to earwig on that one. So let's see what happens. But this is what's happening behind the scenes. And that's why these calls are important, because you've got to keep your head up and you've got to stay focused, because it's very easy to get despondent and give up. Very, very easy. So you've got to look at the big picture and stay above the parapet. So M2, as I say every week, M2 money supply up, interest rates coming down. If not coming down, then they're just simply printing more currencies. So it's in essence the same thing. Availability of, on this right-hand side, I didn't mention that this week, but exchange reserves and OTC over-the-counter reserves of Bitcoin are dropping dramatically to all-time low levels. That's the symptom of all the Bitcoins that are being bought up mainly by the ETFs. The overall global demand, something noted that the retail people, the amount of Google searches for Bitcoin has dropped quite significantly since November. Now, you'd expect that because it was all rah, rah, rah. And most people, are very Saturday night. Yeah, they'll get involved with stuff because it's the flavor of the day. And what creates flavor of the day? Bitcoin all-time high. What do most people do? Retail people I'm talking about, they get excited at all-time highs, right? And then they get dumped to 79 grand. And what do? So we know this as professionals. So, global demand is, I'm talking about company and government level global demand. Retail demand is yet to resurface in this cycle. So keep an eye on that, which is why we're going to go well past all-time highs. Just another couple of points I picked up this week on macro is this perception. Again, it segues out of what I've just said on this chart on the right-hand side. This orange line here, okay, they've called it in this report crypto, right? But crypto and Bitcoin are not necessarily mutually exclusive. But the whole idea is the American consumer, which could be construed as the Western consumer, they still have this very twisted view of best long-term investment, despite over a decade of Bitcoin beating any other asset class on the planet. Now, that can only be down to bosses, banks, and governments, education, and media. But just this last few months, literally, you're getting that shift, as we've already discussed. So there's a lot more people with their eyeballs on digital assets, and that's going to go one way. And when you've got the likes of the vice president of the US standing on stage in Las Vegas next month, that's another big part of it, right? So the tailwinds are significant. Bitcoin treasury companies popping out of the woodwork like nobody's business. David Bailey, the US government advisor there, is the latest one to bring that to the fore. Another Bitcoin treasury company. Yeah, more tailwinds. Meta, 3 billion users. That's all. Only 3 billion users, only nearly half the world's population. Getting back into exposure to digital assets, not necessarily Libra, not necessarily Ethereum, not necessarily Bitcoin, just exposure to digital assets. That's where we front run. Because we know things that these 3 billion people will take another few years to possibly even comprehend, let alone understand. So all you've got to do is ride through that whenever you are funding your Bitcoin from. We went through that big long list earlier. Go back to the start of this video and have a look. And then PayPal, the former president of PayPal, going into Lightning Network. Now, Lightning Network is possibly the holy grail when it comes to where Bitcoin really needs to be to go to the next level. In other words, a transactional entity. It becomes its own right, like gold and currency itself. It's non-taxed because it becomes a transactional entity. That's the next step for Bitcoin, in my opinion. Okay, and that's only going to happen when you're getting hundreds of millions of people being able to interface between digital banks and wallets and everyday life. But at that point, Bitcoin won't be taxed. And that's something else to think about as we prepare our next goals. Now, real quick, finish this section on geopolitics, just as important as the macroeconomic side, because there's such a lot going on. And it does affect us in the DBM community. We didn't want to be affected by it, but if you think about it in the round, if you are going to get involved as being closer to the money supply, then you are going to get embroiled in global politics, whether you like it or not, because you are an indirect owner of the consequences. Whereas if you just work in fear on the edges, you're so far away from the center of the money supply that you're never going to hear it. You might get a few things, sound bites off the media, but most of the time you'll wake up every day and go about your business. In this industry, you're embroiled. And it's become increasingly obvious that we are very embroiled because we've spent the last 10 years putting ourselves in front of things. So on the Bitcoin level, it's all about hash races now rather than arms races. The Europeans have got themselves in a position where they've left holding the baby when it comes to the military complex. So they're going to have to sort that out. Not doing themselves any favors on trying raids from Ukraine to Poland, by the way. But in terms of the sanctions side of stuff, which is the big weaponization of currency as opposed to traditional ways that countries have fought, which is throwing men at men and fighting and weapons and everything else. They've got a lot of currency battles going on now because of the nature of the world since Bretton Woods. And that's manifesting itself in all sorts of different ways when it comes to the wealthy North, the developing South, the BRICS nations, the old nations of Europe, and obviously the US are clashing together with China coming in and being much more globalistic as opposed to what it used to be, which is very much internalized. It's grown out because it's become the production, manufacturing capital of the world since the 70s. That's now all shaken out. This is where America are trying to have the cake and eat it right now. They need to reduce the dollar and they need to make sure they're getting the balances in place. That's happening as we speak right now. What caught up in all that has been the sanctions around Russia and Russian-related countries because of Russia's activities in trying to protect itself from what it perceives as the ever-encroaching era of the UN. So whatever the reasons behind it, they're just trying to stand up for themselves. That's caused wars, and that's manifested itself in Ukraine as we speak. It's looking like that's coming to the end of that phase, not necessarily because Ukraine or Russia are getting what they want, but because neither country can afford to carry on because of the political integration of the way the world works. Having said that, Putin last week has confirmed, as far as he's concerned, you've got to be careful what you believe, that a lot of their trading now is being settled in Russian rubles and the Chinese yuan. So where does that leave the US and Europe? Well, Europe's already had the problems it's had because it relied on cheap Russian gas and it got itself embroiled in this pipe dream of eco-friendly energy. So the middle class of Europe paid for that. That's now arguably going to shake itself out because it can't persist. You know, they tried the experiment of mass immigration to try and get cheap labor, and that's unwinding now. And they've also got the problem of not keeping up with what's happening with the petrodollar, the US dollar, and Bitcoin itself. So the EU, UK, and Canada are in a real mess, And these deals are just going to get done around them. Okay, so we'll see where we end up with that, which is why I'm a big fan of Ireland at this particular stage, because it's a size of country that can do it to become the European El Salvador. But the whole idea is that we're observing this going on and we're embroiled inside that sanctions mechanism in one of the major projects we operate in. And we really do need that to shake out so we can get back to business on something we've been building for the past 4 years. Not easy, but very frustrating, and it causes a lot of heartache. But the whole idea is to be aware of it at this level so that you can see the wood for the trees as we move forward. All right. The next thing that will hit us is CBDCs with digital currencies. It's looking more and more and more like the US is pushing back from CBDCs. It's looking more and more like the EU is pushing towards CBDCs. No prizes for guessing who's going to win that battle. So we'll see. But either way, it doesn't matter because we are sovereign with sound money as long as we self-custody Bitcoin. China's announced massive rate cuts on top of what's coming this week with regards to trade deals, okay, and put a huge amount of liquidity in because China, you know, while it does have the upper hand, it is desperately short of what it needs if it doesn't rebalance what it needs with the rest of the world in terms of it has become the manufacturer of the world. That is a big thing to consider when you look at the massive amounts of money entering the markets. Massive amount of money entering markets equals, yeah. So just this morning, literally the UK's time frame, we picked up that the tariff effect is now in play. UK did their deal last week. China's now seemingly done. The market is reacting as we speak. And on top of that, you've got the pharmaceutical information that came out just in the last few hours from me recording this video. So huge amounts of market reaction. And again, it's all good as we accelerate towards a new world order in terms of how global economics works. And all you've got to really think about is gold and Bitcoin are the only neutral assets. The only neutral assets are gold and Bitcoin, which is why we stack them. Just a reminder, if you want more support on how we track people through this every day of the week, support, communicate, discuss every single element you can think of, from security all the way through to leverage, and keeping up with things most of all. And whatever you've decided to get involved with, you must keep up with it no matter how hard it gets. Keep moving. That's better done working together. So if you want more information on that, click the link below, choose which level you want to be a part of DBM with, and we'll see you inside the academy. No problem at all. See you on the next video.